Welcome to the Child Care Genius Podcast, the world's leading authority on child care marketing, mindset, expansion, and profitability. Our host, Brian Duprey, is the world's most sought-after child care coach, having helped tens of thousands of child care owners from around the globe take their business to the next level. Let's welcome to the Child Care Genius Podcast, our host, Brian Duprey.
Hello and welcome to the Child Care Genius Podcast training series. I'm your host, Brian Duprey, along with VP of Coaching at Child Care Genius, Michael Braswell. Good afternoon, Michael. How are you?
I'm doing fine, sir. How are you?
I am tremendous. We got a cool topic today. So today we're going to talk about having an emergency fund and why it's important to have some good savings in your business for emergencies. So let's dig right in. So why do we need an emergency account?
To alleviate stress off the owner. I mean, that's common sense. I mean, you want to we're all going to have a rainy day someday, and you don't want to have that conversation with, I may not be able to make payroll, or I may not be able to make rent. So by having that emergency fund stacked away, it's just peace of mind, and you're actually able to make better business decisions when you're not stressed over not having sufficient funds.
Payroll and taxes are the two big expenses, and rent, obviously. It's not like you cannot pay your employees.
Right.
You know, that's criminal. You got to pay them, and they'll shut you down if you don't. Labor rules against that. So it's one of those things where you have to pay, and it's your biggest expense. So in an emergency, something happens, you have catastrophic expenses, we got to get an emergency fund, and we can build it up. So we've done other podcast series talking about paying down debt. Now we're going to talk a little bit about accumulating some wealth or accumulating some money that you can use for potential problems. So one of the things I like to do is create what they call sub-accounts. So most banks will allow you to create a sub-account inside an account. And my bank lets me have, I think, 4 or 5 different sub-accounts under the main childcare business checking account. So you could have a sub-account for taxes. I could have a sub-account for maintenance. I could have a sub-account for vacations. And I could have a sub-account for just general expenses if you want. Whatever you want, you can create a sub-account and make it for anything you want and have a certain amount of money going into it every single month. Why would you want to be consistent in that, Mike?
No, it's just because basically it balances out cash flow. I mean, if you're consistent on the expenditure month after month after month, say it's, maintenance $500 each month, and then, you add that all up at the end of the year, you've got $6,000 ready. So it's just, and then you just keep accumulating that. But that way you're never just hit with ebbs and flows, and you can get a better average.
Exactly. And it all has to be automated. You can't physically transfer because you will forget. Other expenses will come up. It won't be a priority for you. You'll say, I could use that money on something different. So it has to be out of sight, out of mind. That's the only way this works. And you have to try to figure out what's the most you can put away each month for a future problems and savings. And eventually you'll find a cap amount. You can say, no, maybe my cap is 2 payroll periods. So if your payroll is 30,000, maybe my cap in there is 60 in this. Maybe if my worst case scenario, my whole playground needs to be refurbished, or my entire parking lot needs to be done, it's going to cost me $50,000. Maybe I cap my maintenance fund at $50,000. So eventually you can find out what that cap is based on what you know, but you just got to keep putting in until you get that cap. Taxes, you'll want to, obviously you're going to be putting money in there, and money will be coming out as you pay them. So, and maintenance too, some will come out. And I do this with all the properties that I own. I put money in, I take money out. But you need to have a plan. And a plan is a way to do it. What are some ways that you can implement this?
So I do it a little bit different than you. You say, you list out sub accounts. I actually make sure that money is working for me. I need to make sure that it's liquid to where I can pull it. If I need to cover payroll instantly, I can pull money straight out of it. So that's why I actually use a very high interest bearing money market account. Just so I'm keeping up, well, not lately, but I'm keeping up with inflation and, trying to make sure that I'm not losing money. But at the same time, it's sitting there and always liquid. Now, what I did was just make sure that I had 3 to 6 months of expenditures, because I want to know that if I have a really bad downturn, I know that I have a war chest that I can always tap into for extra payroll, rent, anything that happens. Like I had a catastrophic event in my center, a month ago where, a toilet drain separated underneath the foundation. I mean, who knew, right? You can't anticipate these things. And the building's been there 20 years. Who knew? And so they actually had to break open the foundation, tunnel under. I mean, it ended up being 15 grand. So just a hit of $15,000 overnight. I didn't even sweat it because I knew that I had the money set aside for it. So that's how I implement it.
And that's the way to do it, is having that plan in place, having an emergency fund, building that, as you call it, a war chest, but anything in there. And also having and there's other ways besides having liquid cash. You can use a home equity line of credit as a backup secondary emergency fund as well. So if you know you have an open line of credit for like $100,000, say, then in an absolute emergency, you can have access to that just by writing a check to yourself out of your home equity line of credit. It's taking debt, it's paying interest on it, so it's not my first choice, but it is a good backup. It's a good plan B on emergency or catastrophic events, recessionary times. I know in 2007 I had to tap into home equity line of credit for that purpose, just get through that recession, and borrow even money from retirement accounts during that time. So have those plan Bs once plan A is exhausted, but plan A should always be savings accounts and maybe even money markets, something a little more liquid that you don't have to pay interest on, that you actually get interest on.
Correct.
Get your money making money, right?
Exactly. I think made 8 or 9 grand off of it last year, and it was just sitting there.
And if you have a lot of money in a savings account making nothing, that's going to be another podcast episode for us to talk about. I did a coaching call with a client yesterday who's got $1 million in a savings account earning nothing. Yeah. So we need to get that money making money. And that's going to be a whole new podcast that we'll talk about as well. Some people are like, oh, I wish I could have a problem that big. But it started with the first deposit. This was a long-term savings plan over many, many years that started with that first deposit. So, journey of 1,000 miles starts with the first step. A journey of saving $1 million, saving starts with the saving that very first dollar. So getting a plan in action, implementing it, being disciplined, not touching for anything other than its intended purpose.
Yes.
And another thing is, another area that I've seen a lot of owners get in trouble lately with is taxes. A lot of people got a lot of extra money during COVID, and grant money came in, and there's tax consequences to all that, gravy train, free money that came in. The government wants their third of it. And a lot of people didn't think that bill would come due, and sure has come due. I had 2 clients that had to write $200,000 checks at the end of the year because they didn't plan for it in between. So, something my accountant and I do, we plan this every month. We looked at that. And I put money aside every single month based on where my projected federal income taxes live. Do you put money away for taxes, Michael? Is that how you do it?
Actually, so I was in that same paradigm you just said, probably about 2 years ago. And then I got, after getting that one big hit to the IRS, that where we filed your extension, but you're going to have to cut a check for $120,000 to the IRS. I'm like, great. So luckily I had it set aside, but some people don't. And then, so I stumbled across a book that was called Profit First by Mike, and I'm going to butcher the name, Michalowicz. And it has a really good breakdown because it basically states that a lot of entrepreneurs follow the general accounting practices to where, we go through our year, we put everything together. We don't really truly know what we make until the CPA is blessed it at the end of the year. And then we know, oh, okay, now I know how much money I made. And sometimes it's, on business owners, we're the last ones to get paid. So, when we look at it, it's like, wow, I did all this work this year and I only made this. So the profit first is more of making sure that you set up the 5 accounts. You have a profit account, you have a tax account, you have your operating account, you have your savings account, and maintenance. So once you break all those down, so now every month after I go through and I look at it and I'm breaking everything out, I make sure that the profit is paid out first. So I'm putting 10 to 15% into an account just to make sure that I'm going to get paid 10 to 15% profit. Now, you may need to dig into that, but you're at least earmarking it and setting it aside and getting out of the general ledger. Then you actually, for the tax account, I'm putting away 33%. So making sure that that's going in every time. So by having those accounts now, I don't sweat anything because I know every month where I'm at.
Yep.
So
love that.
It's a great book.
That is a good book. A lot of people recommend that. So I definitely highlight that. So thank you for bringing that up. And we're going to conclude this podcast, but we'll talk about this in other series. But again, start with a plan, be disciplined, put money away every single month. In an emergency, you will call and thank us for that. So if we have other resources you can tap into, if you go to our website at childcaregenius.com/resources, we have a ton of tools. We've done financial webinars that you can watch. We have a lot of different tools and tips in there. So we want to thank you. This is Brian Duprey and Michael Braswell, wishing you an amazing rest of your day and happy savings.
Thank you for listening to the Child Care Genius Podcast. If you enjoyed the show, please do us a favor and hit the subscribe button so you don't miss a future episode. Don't forget to visit our website at childcaregenius.com to see a list of services we offer to help grow your child care business. Until next time, thank you for being a part of the Child Care Genius community.